Earlier today, President Donald Trump agreed to pause tariffs on Mexico for a month after a, quote, very friendly conversation with the country's president, Claudia Sheinbaum, resulted in Mexico agreeing to place 10,000 soldiers at the southern border. The president's action sent the market into a tailspin earlier today, but then the Dow clawed back some of its sharpest losses, even briefly turning positive after news of the pause broke. Joining us now, Joseph Lavorgna, SMBC Nikko Securities America Managing Director and former chief economist at the National Economic Council under President Trump. First time around. Joe, it's great to see you. Thank you so much for being here.
Sure, thank you.
You know, we were just having an interesting conversation with Rob Bonner. I don't know if you were listening about tariffs as a tool. And he was last mentioning tariffs as an economic tool, specifically to help industries. That is not what these tariffs right now are, right? There are tariffs as a policy tool. What do you think of tariffs as a policy tool?
Well, here's the thing. Tariffs can be used really threefold, and everything's kind of interconnected. So you've got tariffs as a potential revenue source. You've got tariffs as a national security cudgel, where you care about the border and you want to get the parties that are involved at the table, and tariffs are a way to do it. And thirdly, you want to help reindustrialize, re-onshore business. Now, the advantage of starting with the national security issues is that IEEPA, the International Emergency Economic Policy Act, I think it is, allows the president, and rightly so, to worry about the border and to try to engage the various parties in a way that is advantageous to the U.S. Moreover, it also sets the groundwork for a very tough negotiation, which over time will aid him in inevitable negotiations with China. So I would not separate these things. The tariff is a tool that can be used a variety of different ways, and in some sense they're all integrated, because I'm going to guess that as President Trump kind of stacks up and gains some of the win, so to speak, although we don't know the deals yet on what will emerge with the U.S. and Mexico, that will help him down the line when he inevitably negotiates with the Europeans and, of course, the Chinese.
So the one that I think is one of these things is not like the other situation is indeed Canada. I mean, most folks who we're talking to say this one doesn't make sense. Like, if you're talking about a national security justification and fentanyl, then the southern border makes sense. The northern border is a very different situation. So what do you think, A, is going to be achieved, but B, is the sort of economic damage that can be done with tariffs against Canada?
The bigger problem at the moment seems to be the southern border, no question. But we do share a border with Canada, and therefore I think just to look at just Mexico alone and say, well, the northern border isn't really an issue, let's not deal with it. That seems to me to be just, it's only half done. You want to look at everything because we do share a border, and eventually, my guess is these tariffs will be used in other conversations as it relates to economics. In terms of damage, about 80% of Canada's exports come to the U.S. Exports are about almost a third of the Canadian economy. The U.S. is in a far stronger negotiating standpoint vis-a-vis Mexico and Canada. So if there's going to be damage done, it's going to be in Mexico and Canada. It's not going to be in the U.S., and the president, I think, understands that.
Yeah, but Joe, tell that to the National Association of Manufacturers, to the home builders, to generic drug makers, to farmers in the U.S., to automakers, all of whom have said this will be damaging to our industries in the United States, and we don't want you to do tariffs.
Have you seen the small business data? NFIB is small business. Their numbers are booming. As President Trump said, there will be some pain, but the whole point is to reindustrialize. Some of those areas you talked about will be areas potentially ripe for more U.S. production, which will then benefit U.S. labor. So we have to be careful in what we're cherry picking. Right now, this is a negotiation. Let's see how it plays out. But so far, President Trump hasn't given anything and has already gotten something back in return, which is the Mexican government, as you reported, helping secure the border. So we'll see what happens with Canada. But remember, too, when President Trump first made these 25% comments on tariffs, Prime Minister Trudeau quickly went down to Mar-a-Lago to work out a deal. So I understand your concerns, but I have faith that Mr. Trump knows what he's doing.
Joe, another question for you. Are tariffs necessarily inflationary, Joe? I ask because, you get two economists, you're going to get three opinions. But some economists will come on this show,
sure,
Joe, and they'll say, yes, higher import costs are going to push prices higher for consumers. You'll have another economist, Joe, who will say, no, the importers are going to absorb those costs like they did during Trump 1.0. Which is it, Joe?
Right. Well, Bob Arno mentioned that depends the size of the tariff in part, but you have to look at, I'm very traditional on this, and I say you're correct, economists disagree and get a lot of things wrong. However, generally speaking, I think the consensus is that inflation is always and everywhere a money phenomenon, and I'd argue credit. Money and credit creation is what drives inflation. Therefore, by definition, tariffs cannot be inflationary. They are a price level adjustment in absolute terms, but you only get inflation if monetary policy is excessively easy. And that's where I would leave it. And that's, to me, what makes the most sense. And by the way, the Fed, by its own admission, when it did a study back in September 18, talked about a 10% across the board tariff as basically being a modest one-off price level change. So that's how I see things playing out. If there are tariffs, which I expect, they will not impact the inflation rate.
I want to turn to tax cuts finally here, because the president has also talked about the tax cuts being paid for in part by the tariffs. And there's been some consternation about the order of these, right? That the tariffs are coming before tax cuts are agreed upon. If he comes to a deal in every one of these situations, then we don't have that tariff income, right? So are there areas where you think there just should be tariffs, period, full stop, in order to help pay for the tax cuts?
Great question. I don't know. I mean, different people in the administration, from what I've read, are proposing different things. Tariff could be a revenue source. My hunch is just that there will be some minimal level of tariffs to try to raise revenue. Whether it's legislated is a different matter, but I'm guessing you're going to need some revenues to get the Freedom Caucus folks, who tend to be more fiscally conservative, on board. But we're going to have to see, are we getting one reconciliation bill? Are we getting two? So that remains to be determined. But I'm assuming when I put my forecast together of the deficit and financing, that we are going to raise some money from tariffs, and depending on how they're implemented, could conceivably raise a lot, or if they're more de minimis, raise just a bit. But it should raise something.
Well, as always, we'll find out what happens. Joe, thanks a lot. Appreciate your time.
Never a dull moment. Thank you.
Thank you.